UBS, I was with Sergio Motti yesterday. Great FX numbers, great investment bank numbers, and profitability at the wealth management doing splendidly. If you look at this, however, you see Deutsche Bank trailing as the real laggard. Have you got faith in Seving?
Well, I think part of his problem and those numbers you've just seen come from the fact that the credit rating of the bank has actually been deteriorating over time. And we and a number of institutions have a series of levels in which we can actually trade as counterparties to that bank. And when you go below those levels, it makes it difficult for you to carry on the volume of trade that we were undertaking in the past. And it's as simple as that from a FIC point of view. The thing that me is most disappointing in these numbers actually in some ways is the DWS side of things. So that has been the powerhouse of that business as a former employee. It's fascinating to see actually the evolution of that business. It is the core asset manager in Germany, and to actually hear it talking about sort of a backward step or backwardation in 2018 through the remainder of this year is a surprise. So that to me is a negative. Now look, it's a separately listed entity now, so it'll be interesting to see what Seving's plans are for that asset going forward. I think the market's going to look at the discipline around your headline story in terms of revenue versus cost as the critical driver there. And I think if you can see some form of normalisation there, whether they actually go through some form of additional capital raising to try and improve those ratios, I think that's the next message we want to actually see. And that gives you some form of comfort that actually outlook is going to improve and we can then start to see credit ratings improving again. And I think that's critical for their FIC business going forward.
And the risk-weighted assets have been reduced, hence bouncing up that capital to stop people like you, not individually, but corporately speaking, withdrawing the counterparty risk. Do you think, putting your inside hat on, where else would be up for the sort of, the chop or the change if you had that opportunity to sit at the board and say, right, I've worked here, I know where the fat of the land is?
Well, I think it's trying to almost sort of do too many things, and it's focusing on what do you think is your core competence. So you contrasted at the top of the show with UBS, where they clearly took a decision to step back from the investment banking side, focus on high net worth and the wealth management business, and you can see the improvement in underlying returns. And ROE is not a very simple metric, but actually it's a great way to determine your banks. And ultimately, that's what we use as a rule of thumb. If you've got a low ROE business in there, ask yourself the question: why are we carrying on doing that when we're sub-cost of capital type businesses within the group?